This is GM on the monthly chart, and this is GM on the weekly chart, and this is GM on the daily chart. And I realize that the charts look like a hot mess, but I can explain if you give me a couple of minutes. Before we get into the analysis, let's look at why GM may have reversed indefinitely. So GM stock was surging on Wednesday after the automaker surprised investors with a 10 billion accelerated share repurchase program and raised its dividend by 33% to 12 cents per quarter. The automaker also reinstated its guidance after pulling it earlier during the UAW strike. It believes that the strike will cost 1.1 billion in operating profits, primarily due to lost production. In other words, they will not be able to make it up the lost time, even with overtime. It's easy to see why investors are cheering. The dividend hike and aggressive share repurchasing program are the kind of shareholder-friendly moves that typically elicit a warm response from the market. And the stock was also well positioned to benefit from such a move. Even after today's stock gains, GM shares trade at a forward price to earnings ratio of just 4.2 based on the revised guidance. That's the kind of valuation that's normally reserved for dying companies or is caused by a one-time profits boost. Neither of these descriptions apply to GM, which remains a healthy business, though its industry is in the midst of an assumed transition to electrification, while autonomous vehicles are also expected to eventually disrupt the industry, though this could still be in the distant future. At its current price, GM stock looks like a smart buy. The core business continues to generate strong profits. It's adjusting its cost structure to absorb increased labor expenses after the strike, and it's making needed investments to prepare for the transition to EVs and autonomous vehicles. All right, so going back to the charts again, this is the monthly chart. And we can see that in recent months, price broke through and closed below key support down in that $31 area. However, since then, again, price has reversed, and I think indefinitely has reversed, or definitely has reversed. That's what I searched at. This is the weekly chart, and you can see how, again, on the news, price went up roughly $4 and is retesting that support band at the $32 level. And so this initial surge, which was easy, I don't think it's going to be easy on this next leg higher. Has to deal with all this mess at about the 33.30 level. You know, I could say that this is a drop, huge base, and then the drop. So if I was to draw that out, it would look like something like this. And that would imply a weekly seller's level at the $34 level. So let's just put that in so we have a marker. At $34. All right, so let's scroll down to the daily chart to end the video. Again, that was the gap higher on news. You have price now at the 100-day moving average, and you have the 200-day moving average within that weekly sellers. I should say sellers. So price was definitely oversold, and you had a nice reversal. Again, I anticipate price basing potentially before the next leg higher. with a target at $38 going into 2024. Thanks for watching. Subscribe. Please like the video.